please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Chartbusters. Well, it's a show we're going to highlight a whole host of buzzing stocks. We'll also get you a management and get you what's happening in terms of our markets today. Well, we started off on the back foot, but not too bad because the mid cap as well as the small cap index have moved into the green. And Mangalam, I'll say it's a fairly good start actually.
Very good start because, you know, we started on the back foot and then we haven't gone further back as we speak. And, you know, we've maintained that 10,394, 10,400 thereabouts mark. And if something provides some solace, the green lines have crossed the green and the red lines, and the green line is above the red line now. And the Asian markets, we are outperforming them. So if you take a look at the Nikkei or the Shanghai as well as the Hang Seng indices, we're outperforming them, not extending our cuts. Let's see what happens. And I was taking a look at the options. No real scramble for cover by put writers as well. So that is something we'll keep an eye out on. But first up, all the top headlines that we're tracking at this point in time. PSU banks, they are under pressure. The RBI tightens the screws, discontinues issuance of letters of undertaking and letters of comfort for trade credit by banks.
And PNB is under further pressure. PNB files supplementary complaint with this CBI on additional findings in the fraud case. The fraud amount by Gitanjali Group companies that increases to by around 940 crore rupees. The total amount of the fraud in the PNB case now stands at 13,600 crores.
Technology stocks, they gain in trade on the back of weakness in the rupee as a result of PSU banks scrambling for dollars for importers a day after the RBI has scrapped LOUs and LOCs.
And shares of Fortis Healthcare surge in trade on reports that Malaysia-based IAH is likely to make a voluntary open offer for the non-promoter stake in the healthcare provider. The news development comes after Yes Bank acquires 17% stake by invoking the promoter's pledge stake.
IRB Infra gains in trade at the company's Chevy emerges as the preferred bidder for two projects from NHAI. Orders are with a bid of cost of 3,465 crore rupees in Tamil Nadu.
All right, then the Nifty is clawing its way back to around the 10,400 mark. How should you trade the Nifty at this point of time? Well, Ashwani Gujral joins in. Ashwani, what's your take on the Nifty? Are we going to see a bit of a recovery from here, or do you think, in fact, we are set for a rather weak second half of trade?
Well, since on this show we are always talking about cricket, let me say we are holding on to our wicket,
Okay.
but not scoring anything, not taking the attack to the opposition.
Okay.
And often, you know, this sort of kind of a slow up move or, you know, just holding your ground never really works, because when the bear will come, he will, you know, shake the ground from underneath your feet.
Okay.
Mid cap, small cap maybe have recovered, but large caps have not recovered.
Okay.
And if you can't even regain on the Bank Nifty yesterday's low, so we haven't really made up any ground. So this is kind of, I would call it choppiness, and this is a good time for people who want to go short, say with a 10,430, 450 type of stop. Right time to short. The market is showing its hand that it's unwilling to take yesterday's highs out.
Okay.
Particularly on banks, I think large private banks are coming off, and PSU banks are kind of recovering. So that way, still the view is that we should maybe by afternoon come off.
Okay.
As far as individual stocks are concerned, REC is a sell with a stop of 130, target of 118. Bank of India is a sell with a stop of 101, target of 92. And Tech Mahindra is a buy with a stop of 625, target of 650.
Okay, so all right, so sticking with the cricketing parlance, I think, Mangalam, what Ashwani is telling us is the ball is new. You know, the batsman has gone in there defending on that ball, the new ball at least.
Right.
But at some point of time, I think he's going to lose his wicket.
I don't know, because, you know, Ashwani, playing for the batsman out here purely, we're still one in the green, one in the red as far as the broader markets are concerned. Mid caps are not falling. We did respect yesterday's low. We are recovering a bit from there. On the Nifty at least, do you think if we see through the first hour of this cricket match, maybe the batsman can go out and score some runs if the sun comes out?
See, the point is that when do the bowlers or the bears get on the back foot?
All right.
When you have Sehwag thumping the ball, you know, through the covers, etc. if you are, just defending, letting balls go, the bowlers, the pressure is on the bull that way. So make sure that, you gain some ground as well. Just standing around here will not help you.
All right, Ashwani, so on that note, then I think we'll have to go for a drinks break.
Director suggests take a drinks break. So, and this is purely sports drinks that we're talking about. But come back and we'll get chatting on the sector that is underperforming today. PSU banks under pressure as RBI discontinues issuance of letters of undertaking and letters of comfort for trade credit by banks. So we'll get you more on this on the other side. Stay with us. One sector that has been under pressure for a very long time has been the PSU bank space, and this primarily after the Nirav Modi PNB scam. And now yesterday we got developments coming in from the Reserve Bank of India. They've discontinued the issuance of letter of credit and letter of comfort as trade credits for imports into India. The move, which can be seen as a direct regulatory fallout of this mega Punjab National Bank fraud, will impact importers who depend on these instruments to get bank guarantees for their imports. In fact, we spoke with a whole host of people. One of them was the former RBI Governor Raghuram Rajan himself. Let's hear out what he had to say on this development.
Well, I can't opine on current policy, and I'm sure they've looked at the issues. One of my concerns in India is that there is sometimes a very cavalier treatment of guarantees, whether it is bank-given guarantees or government-given guarantees. We don't think these are real, and it's only when they are called upon by the entity that has relied on them that we understand that it's almost like giving a loan, or in fact more than giving a loan, because it's usually called upon when the loan is in distress. So it's actually like providing equity. And unless we account for these properly, there are huge contingent liabilities on the government balance sheet as well as on bank balance sheets, and it's important that we acknowledge them.
Well, we also spoke to the managing director of Union Bank, as well as we did speak to the ED of Canara Bank. Let's listen in to what they had to tell us.
LOU is a part of the working capital assessment for any corporate. We assess the working capital and we give them the sub-limits like LOU, LC, packing credit, even the post-shipment credit and all that. So it is only a sub-limit. So in case if the LOU is stopped, it will shift to some other part of the working capital assessment. So the corporates will not have a problem in working capital because it's a part of the limit actually. The LOU already issued, it will get squared off in the due course of time. Further LOUs will not be issued. The customer has to shift to some other form of working capital raising.
It should not be much because the total LOU business, if we see, as compared to our total advances, it is less than 3%. And as such also, the cost of LOU business is actually smaller compared to the other non-fund based business. That's why it is being preferred by the customers. So the overall net impact will not be much on the non-fund based income of the bank.
All right, net impact would not be much in the non-fund based book of the bank, and that is perhaps reflecting in the stock prices that we're seeing. Syndicate Bank, IDBI Bank, Allahabad Bank, all of them have recovered from the low point of the day. Our ticker team has constantly kept us abreast of all those moves. But let's move on to an exclusive then. Anshu Sharma, she caught up with Spencer Dale, the group chief economist of BP, began by asking him if he expects the oil demand to peak at some point and what are the key levels to watch out for in terms of crude prices.
I think the better way of thinking about it is not peak, think plateau. Okay. Once oil demand stops growing, it is very unlikely to fall very sharply. So I think the better way of thinking about it is think plateau, not peak.
Okay. US in terms of production is growing and also growing globally. What trajectory do you see US grow in the oil and gas market?
So we think both US tight oil, shale oil, and shale gas is likely to grow very strongly over the next 25 years. And as a result of which, I think US will emerge clearly as the world's largest producer of both oil and of natural gas, led by the shale revolution that we've seen there.
Okay. Where does India stand in terms of outlook for energy growth, and how do you see the fuel energy mix?
So I think India has a story of being one of the world's largest growth markets for energy demand. So China and India together both accounting for around a quarter of the world's growth in energy demand over this period of time, with by the 2030s India overtaking China as the world's largest growth market for energy. And that's driven by strong economic growth in India and increasing prosperity. In terms of the fuel mix, strong growth within renewable energy, led by solar energy. I think what's happening in India in terms of solar energy, everybody around the world has been looking at with much admiration, and I think we'll expect to see that continuing into the future. But also coal remaining an important part of the story here. Even if the share of coal gradually declines over time, it's still remaining a central part of the fuel mix.
And it was planning a strategy to have import strategy for oil and gas. What have you heard about it, and what strategy should India adopt in terms of importing both oil and gas?
So I think, a key feature in terms of importing gas is the growth of liquefied natural gas. The good news story here is the growth of liquefied natural gas means that that market's becoming far more competitive, and as a result, India can benefit from that. It is no longer dependent on just one or two suppliers. It can go to the world markets.
How do you see the oil demand going forward, considering we are considering some of these mobility action plan as well as policy on electric vehicle?
So I think electric vehicles around the world are growing very rapidly. That's a very exciting future, and it's real, it's happening. We think, in one of our scenarios, we think the number of electric cars on the planet could rise from about 3 million today to over 300 million by 2040, so really rapid growth. That's happening. The impact of that on oil demand is relatively limited. That's true for the world, and that's also true, I think, for India.
All right, with that, we'll take a short break. Come back, we'll discuss crude and crude derivatives going forward. UFlex, that's a stock on our radar. We'll get chatting with Rajesh Bhatia, the global CFO of the company, on the other side. Stay with us. So the stock on our radar right now is UFlex. It's on our radar because they've launched a couple of products in the printing space, the printing machinery, that is. To discuss more of that, we have the global CFO, Mr. Bhatia, joining in. Thanks a lot, Mr. Bhatia, for joining us today. Before we talk about your new launches in the printing space, if you could give us an update on what kind of prices there are for BOPET films. We're given to understand that they've risen. If you could put some numbers to that and confirm that.
I think the prices for BOPET are almost following the raw material prices, which have gone up from about 62 rupees at the start of the year to about 73 rupees now. So the BOPET prices have improved, first in line with that, and secondly, the BOPET is now clearly seeing a demand-supply equilibrium, which has also led to improved margins for the BOPET products across all the companies. And but at the same time, on the BOPP side, there is some overcapacity currently, with some of the capacities having come up. So there we're seeing a bit of a price distress, and it will take some time for that demand-supply mismatch to correct. But BOPET is clearly, we've seen that in the last 6 months or so, that the demand-supply equilibrium is now almost
What's the
there.
price, Mr. Bhatia,
That's
for
how the prices have, sort of a...
Mr. Bhatia, what is the price?
Depends on the product to product, but you can take it as about, depends on the product to product, but we can, take it about 120, 22 rupees currently.
And that compares with
what? It's still lower than the landed price of the imported. It compares with, you can say that at the beginning of the year, they were still better, but, in June, July, they had gone down to about 90 rupees also. And now they are 90, 95 range they were, but they are now up to about 115 to 120 range now.
And Mr. Bhatia, that compares with imported prices of what? You said it's still at a discount to imported prices. What would landed imported prices? I think the difference between the landed imported price of the BOPET film and the prices here will still be between 5 to 7 rupees, depending on the exchange rate and the other things that keep on fluctuating, but it's still lower than the imported parity prices. All right, Mr. Bhatia, I wanted to talk about your liquid packaging plant as well. There was so much of hope, so much of anticipation for that particular plant. So if you could tell us, what is the current capacity utilization levels there? How do you expect to ramp up over there in that liquid packaging plant? And are you adding more customers over there? Do you expect to generate more revenues coming in from the liquid packaging plant?
So I'll tell you broadly about the about the aseptic packaging. You know, we commercialized the plant end of last quarter, which is, and you know, the December quarter was the first full quarter where we had the full impact of that.
Right.
But you know, any aseptic packaging business is a slightly longer business to get the customers buy-in, because you know as I've said earlier also, that you have to go through the product life cycle tests and all that.
Absolutely.
And all these companies are very conscious
Mr. Bhatia,
about,
sir, we're running a little short on time. So we wanted to understand, as you're telling us, you're looking to ramp up that particular unit. So for FY19, what kind of revenue numbers can you see over there? FY20, you know, look at ramping it up even more. So you give us some numbers, sir, some kind of guidance over there.
Yeah. So currently we can produce about 3.5 billion packs over there. So FY19, we're looking at about 2 billion packs, you know, level targets.
Okay.
And next year, FY20, we'll look to about 3.5 billion, and that is where, you know, we will.
What does that mean in terms of revenue,
some
sir?
of our printing lines. So our revenue for 2 billion packs would be about 350 crores.
350 crores. All right. And you can double your capacity, I believe, over here. Are you planning on doing that once this reaches?
Yeah, we can double our. Yeah. No, currently, once we reach about 3 billion packs a year, I think that's the time we'll do it, because, you know, it's not going to take much to, you know, complete that expansion.
All right, fair point, sir.
Thank you so much. It will take us probably a couple of months to, you know, sort of complete that.
Thank you so much for joining in and giving us all those details, indicating that BOPET prices have increased a little bit, but offset by the correction that we're seeing in BOPP. Most importantly, 350 crore is the revenue that they're targeting from their aseptic plant in the next fiscal. With that, it's a wrap on Chartbusters. Stay tuned to CNBC TV 18. Trading Hour comes up next.